Hey everyone, let's go through a Brisbane property market update for 2025. In 2024, Brisbane property grew more than 13 or even 15%. In this episode, we'll consider how it's likely to do for the rest of 2025, and we'll go right down to, among others, three of the best suburbs that you could consider investing in Brisbane 2025. We'll go through that at the end of the episode. Lots of data, lots of charts to cover. I'll go through these suburbs on a map for you as well. Let's go.
Welcome to the Oz Property Investment Mastery Podcast. My name's PK and I help busy people build passive income by buying top 5% growth and cash flow property and build a portfolio using data without wasting months doing research, spending weekends at inspection or catching flights, or dropping $10,000 to $20,000 on buyer's agents every single time. So if you're confused, lack confidence, and just overwhelmed with all the information and marketing misinformation available online and don't know where to start, then this show is for you.
So, despite the most recent months in Brisbane, price value is really taming down. What we're seeing is that in recent history, it's continued to positively boom. It didn't have a big run from 2010 to 2020, about 18% growth, next to nothing really. COVID lit a fire underneath it. It went boom, growing more than 40% in literally 2 years. 2022 came down a bit, then 23 and 24 started its rise again. So much interest in Brisbane, especially from people in New South Wales and Victoria migrating up. The most recent top performing suburbs were Windsor, where a house, of course, going to cost you more than $1 million, but it grew more than 14% in the last 12 months. Virginia on the north side, yes, it's going to cost you 1.2 million, but that's grown 33%. Virginia is not as good of a suburb as Windsor, but it's had such great growth that it's almost caught up in value. For me, that's really surprising. I've lived in Brisbane for more than a decade previously, and this is something that's really surprising. But Virginia is so well located that in some ways it doesn't surprise me. In the south side, Archerfield has grown 73% in the 12 months, from 555,000 to 960,000. I'm just going through standalone houses. 73%, that's quite tremendous. And you can see there was a lot of projects going on, $38 million worth of projects. So somewhat unsurprising. Wynnum on the east side went up from 1 million to 1.3 million. That's 27% growth. And then on the west side, Darra went up from 655 to 770, 17% growth. So there's so much money to be made in Brisbane. So many people have made a lot of money. You might know some people as well. Maybe you have, and congratulations if you have. But let's consider if this will continue according to PRD, which is where all this research comes from. Average vendor discounting. This is how much sellers are having to discount the listed price in order to actually make the sale. And you can see that since Q1 2024, this average vendor discounting for houses has actually started to go down consistently all throughout 2024. So according to this metric, we're likely to see continued price pressure upwards, although the reality is right now prices at a median level in Brisbane aren't growing so much anymore, but the fundamentals of the data are still bubbling, simmering, boiling away for something to happen, perhaps like an interest rate cut or two, that will reignite the market back into its momentum. But overall, I think the property clock in Brisbane is probably somewhere near around 10 p.m. It can't go up this way forever. It's had a tremendous 5 years, growing at more than 40%. 10 o'clock is probably accurate. Still some money to be made, but you're definitely not investing at the bottom of the market. And a really interesting data point for me is at what price points are houses really being sold? And for the housing category, what we're seeing is that the lion's share, in other words, 38% of houses that were sold were actually under $849,000, which is the minimum band in Brisbane. And then from 849,000 up to about 1.15 million, there were about 25% or 30%-ish in total, and then another lion's share, 29%, were 1.15 million or above. What this tells me, as I've demonstrated in other episodes, is that in Australia, the middle class is evaporating due to fiscal stimulus, monetary stimulus. The rich are getting richer, and the middle class is sliding down into lower socioeconomic bands. And that's where the lion's share of both types of housing transaction has been, on the upper end and at the bottom end, not so much in the middle. Now, can you buy something in Brisbane under $500,000? This is really interesting to me. This yellow color, not the orange, but the yellow color, is where you can still buy something under $500,000. You can see that it's quickly disappearing. There's not so many places under 500K available anymore. And my advice to myself is, when this phenomenon starts to appear, where just a few years ago there was much more yellow in the inner ring suburbs, now it's just on the outer or fringe, that this ripple effect will continue, and in a number of years' time, there'll be nothing available in Brisbane, even units under 500 or 600,000. So where you see a lot of this cluster of cheaper dwellings available, that makes for some really good investment opportunities, because the ripple effect is going to occur. For example, here on the south side, as you can see next to number 1 and 2, which I'll be going through. We'll be going through the top 3 suburbs in a second. Before we get to the Google Maps and the top 3 suburbs, let's see the rental vacancy. Brisbane in the grey line actually has a lower vacancy rate at under 1.5% than even Sydney or Melbourne. Now, oftentimes people think Brisbane's not the biggest city in Australia. Immigrants want to come to Sydney and Melbourne, but that is not what alone drives property prices. There's so much interstate migration coming in to Brisbane because of affordability, I would say, in the most part. There's so much demand from tenants and not enough supply. Now let's get to, among others, 3 of the best suburbs that you could consider investing in Brisbane before it's too late. Number 1, Inala; number 2, Darra; and number 3, Zilmere. As soon as anyone from Brisbane will hear these locations, they'll be thinking to themselves, rough, lower socioeconomic, stigma, crime. Hear me out. I'm also from Brisbane. I lived there for more than a decade. I understand your feelings, but know this: the crime rate has no correlation to capital growth in a location or any location across Australia. There's so many locations in all capital cities where things have gentrified and got better. Redfern, for example, in Sydney, and property prices have gone through the roof. You're probably thinking the same about incomes, but absolute incomes don't correlate to capital growth either. So we'll let the data do the talking. In Inala, it's 14 kilometers from the CBD. All of these are within 15 kilometers from the CBD. And the great thing is that the median house price for all of these 3 is under 850. Inala 700, Darra 770, Zilmere on the north side 825. And of course, these are just medians. If you buy less bedrooms, a smaller house, you can get something under 700. All of these locations have grown more than 15% in the last 12 months. So you've got some great momentum. The vacancy rate in Inala is 0.5. Darra is a little bit high for my liking, actually. It's 2.3. And vacancy for Zilmere is 0.9. Now, vacancy alone doesn't drive house prices. That's why I've kept Darra in this top 3 list. But you have to be mindful that it might take a little bit longer to get a tenant in Darra. The rental yields are atrocious for all 3, but once again, we're talking Brisbane, we're not talking regional Australia, so you have to live with low yields. It might suit you if you're on a really good income and you're not looking for huge cash flow, but also, as I always say, you don't actually have to trade capital growth for cash flow or vice versa. So there are numerous locations right now in 2025 where you can invest and get 5 or 6% yield plus better capital growth than these 3 locations. But let's come back to Brisbane. Let's not get carried away. They're close to shopping centers, and there's almost no building approvals in all 3 locations, which means supply is very constrained in the near future. This is a map of Brisbane. If I zoom into Zilmere, one of the 3 suburbs that we're talking about, you can see how close it is to Chermside, where they're actually expanding the Prince Charles Hospital, $350 million expansion project. Hospital expansions are one of my favorite types of infrastructure projects because they bring with them highly paid professionals, more employment that has longevity, that's non-cyclical. And Zilmere is flanked by now somewhat quite expensive suburbs like Banyo, Virginia that I talked about before that went up more than 50%. Boondall's coming up there as well. Before, maybe 10 years ago, this whole area used to be quite low socioeconomic, going out to Deagon, Shorncliffe. I remember playing tennis out there. There used to be a farmer's market in Deagon. Not sure if that's still there or not. But now, with this record immigration, this affordability pocket is really where a lot of migrants are flocking to, hence the capital growth that's occurring there. Not many new houses being built, if any, unlike 10 years ago or even 5 years ago. And so there's a really perfect storm for continued price growth. Now, on the south side of Brisbane, you've got those other two suburbs, Darra and Inala. Once again, not the best suburbs, historically speaking, from a livability perspective, but that same affordability story really means that this is where people can afford to buy. And so it doesn't matter when you invest in real estate whether you want to live there or not, it's whether there's enough addressable market or enough demographic that wants or has to live there. And if there's enough of that versus supply, then property prices go up. There's 30 to 35 of these data factors you can assess to find locations like this, which I teach my clients, of course. Therefore, you can predictably tell which locations, regardless of stigma, are going to rise. And definitely Darra and Inala have fit that category in the recent history, and that momentum is strong. Now, if we get an interest rate drop or 4 or 5, you might start to see the middle price bracket become more affordable for the average person, because they may say, why should I live in Inala when now I can afford Acacia Ridge? But if we don't get massive interest rate drops this year, which I don't think we will in a huge quantum, then these affordable locations will continue to do really, really well. Of course, you don't want to go out towards Palara, etc., too much, where the supply story is a little bit different. So that's the Brisbane property market. Is it the best place to invest in 2025? Probably not at a city level. Are there locations which will continue to grow at double digits? Yes, especially the affordable category, and well located, scarce townhouses. Are there better locations to invest in where you can get this type of growth or better with a better yield as well? Yes, there is. I'll continue to do these episodes to give you free value. Hit the subscribe button if you got value, give it a like, and join my Facebook group with more than 60,000 people, Australian Property Mastery with PK. Remember, the most important real estate is the 6 inches between your two ears. To level up, I'll leave links below to my podcast, Spotify, iTunes, and YouTube music, Oz Property Mastery with PK. Engross yourself with true education, because that has a direct correlation to financial freedom. See you later, guys.